Hello, I'm Natalie MacDonald and you're joining me on another beautiful day in Sydney, Australia. Now the FX markets may be winding down for the Christmas period, but the Australian dollar shows no sign of slowing. My next guest is Shane Oliver, Chief Economist at AMP Capital. Shane, thank you very much for taking the time to chat with us once again. Much appreciate it.
Thank you.
Okay, now the Australian dollar continues to reach fresh lows against the US dollar. Has the RBA finally succeeded in its desire of talking down the Australian currency, or is this just more a temporary move?
Well, you'd have to say that they have been successful. The Aussie dollar has certainly come down. I guess the question is, has it come down enough to make them happy? I'd probably say no, because in the last few weeks we have heard various officials in the Reserve Bank saying it's still too high, despite the Aussie dollar coming down to around 85, 86, and we're still about there. So in that sense, I don't think they've got enough. The other thing that would concern them a little bit is the Aussie dollar hasn't come down much against the yen and the euro and other currencies. So it's mainly a US dollar phenomenon, and they therefore focus on a thing called the trade weighted index, which is like an effective exchange rate, and they'd say, well, it's come down a bit, but not enough.
Sticking with that US dollar story for a moment, Friday's session, the Aussie dollar, US dollar were really battling it out. Walk us through the correlation between this pair and also with sort of the US economic picture as well.
Well, I guess it's the Aussie dollar US rate that is the greater focus. And of course, what you've got going on at the moment is stronger signs coming out of the US economy, and at the same time you've got softer signs coming out of Australia to some degree, and of course the fall in commodity prices, whether it be energy related prices or iron ore or what have you. And so all of those things are working to push the US dollar higher, and of course push the Aussie dollar lower. And then you've got these other things going on, Europe and the US and Japan and so on, and they're of course pumping more cash into their economies, and so that's pushing the euro and the yen down. So you've got this sort of messy picture going on where the Aussie dollar goes down against the US dollar but doesn't fall as much against the other currencies.
Keeping on these additional factors almost, the China slowdown has really impacted iron ore prices. In this scenario, could a weaker Aussie dollar actually be supportive of that trade?
I think there's no doubt that a weaker Australian dollar is exactly what Australia wants at the moment. So the iron ore price has crashed virtually, along with a whole bunch of other commodities. But if the Aussie dollar comes down as well, then it provides an offset. It makes Australian product more competitive internationally. For example, if you're a Chinese steel mill, you think, well, where do you get it from? If it's somewhat cheaper coming from Australia, then that's to your advantage. And likewise for Australian resources companies, they can say, well, you know, the iron ore price is down in US dollar terms, but in Australian dollar terms, it's not down as much, which to some degree protects their earnings when they translate them back to Australian dollars. So the Aussie dollar and moves in are the great shock absorber for the Australian economy. When times are good, it's going up. When times are bad for Australia, it's going down, and that helps smooth the economy out.
Lastly then, this week is that big data haul for the Australian economy. Naturally, we're likely to see sort of reactionary short-term movements for the Aussie dollar, but in the longer term, where are you seeing the currency headed?
My feeling is the Aussie dollar is still headed lower, probably down to around 75 to 80 cents in the course of the next year, and the debate then becomes about how quickly it will get there. But the reality is that a rising Australian dollar was fine when the prices for our key exports like iron ore and coal, copper and so on were rising. Now that the prices for those things are trending down, it makes sense that the Aussie dollar goes down to help provide a boost to the economy, not just the miners, but also to sectors that have so far over the last few years been somewhat suppressed, like tourism, manufacturing, higher education, where foreign students in China used to go to Australia. Now that lately they've been going to North America. So as the Aussie dollar goes down, it makes Australia a lot more competitive. It also has the effect of offsetting the relatively high wages you see in Australia. So as the Aussie dollar comes down, it makes life a bit easier for Australian companies. So I think more downside, 75 to 80 cents.
Shane, great to hear from you again. Thank you very much for your time.
My pleasure, thank you.
The Dukascopy TV team will be keeping you updated on all of the latest in FX updates and analysis. But for now, it's goodbye from me.